Hi, my name is Jordan Marahefka, and on behalf of myself, Dan Youngs, and the team here at HFG Financial Group, I'd like to welcome you to our 2023 Economic Review and 2024 Economic Outlook. 2023 is in the books, and the last quarter of the year ended on a positive note. Historically, equity markets typically have seen growth in the fourth quarter, and now we can add 2023 to that statistic. In the last 2 months of 2023, the Dow Jones average hit an all-time high, and the S&P grew for 9 weeks straight. To put more numbers to it, for 2023, the S&P finished up more than 24% in growth, and the Dow Jones Industrial Average was up more than 13%. The jump at the end of the year was attributed primarily to the Federal Reserve indicating that interest rates could be cut several times in 2024. Dan, do you want to walk us through what inflation looked like in 2023?
Yeah, thanks, Jordan. Let me try to stay on script here. Inflation pressures continued to ease in the fourth quarter of last year. In October, the 12-month percentage change in all items in the consumer price index decreased to 3.2%. In December, we saw it up to 3.4. While we've seen a significant improvement from the 9.1% peak in June of 2022, there's still a ways to go for the Federal Reserve's target of 2%. The Federal Reserve, who uses interest rates to control inflation, did not raise them in the fourth quarter of last year. They remained in the target range of 5.25 to 5.5. During the Fed's December meeting, it was indicated that we could see some rate cuts in 2024. To date, we've not seen those. At the last Fed meeting on January 31st, they announced they would keep rates unchanged. There are 7 more scheduled meetings for the Federal Reserve in 2024. And although it is currently anticipated that rates will go down at some point this year, the Fed remains committed to achieving its 2% inflation goal and intends to adjust rates according to inflation pressures if they should resurge. The Fed did raise rates a whopping 7 times starting in March of 2022. So no change in the rates 4 times in a row, and the possibility of a rate decrease has many investors cautiously optimistic.
Even though interest rates have risen over the past few years, major banks are still averaging low interest rates to savers. According to Barron's, the average bank money market rates at the end of December 2023 are still 0.6%, and the average 12-month CD rate was 1.94%. They have increased significantly in the last 12 months. However, savers are still seeing these lower returns. For anyone who is interested in maybe getting a better interest rate through CD or money market mutual funds, feel free to contact our office. Recession fears are something that are also top of mind, but they have gone down a little bit over the past year. Most analysts believe that real GDP growth for the U.S. will decline, but remain healthy, and the labor market will remain strong. They also anticipate that inflation will continue to lose steam and get to about 2.5% in 2024. These indicators show signs that a soft landing, or what's called a mild recession, if any, appears to be more possible. Another area top of mind for many people is the geopolitical unrest that is happening right now, and Dan will walk us through his thoughts on that.
The global economy continues to be in an uncertain position in the fourth quarter of last year. Geopolitical unrest was heightened with the conflict in the Middle East and the ongoing Russian-Ukraine war. Tensions with China also continue to remain top of mind in this new year. Uncertainty within the geopolitical issue are key fears for equities, and we will continue to keep an eye on how they affect the markets. Equity markets surprised most analysts in 2023 and rewarded our focus of being disciplined and looking long term. Please remember, as we enter 2024, of our continued proceed with caution. Although we enter 24 with hope and optimism, Equity investments should be viewed with a long-term lens, and short-term movements are still always unpredictable. Now is a good time to review your investments, make sure that they're meeting your objectives and your risk tolerance. We'd love to sit down with you if we haven't recently, and kind of go through things. Regardless of how 24 will bring, what will bring, it is always prudent to watch your expenses, make smart money decisions. We believe in a proactive preparation, and our goal is to provide our clients with solid financial strategy and careful design to withstand any market environments. Key takeaways from our little conversation here today. Inflation is slowing, but is still of a concern. We still have a ways to go before we hit the Fed Reserve target of 2%. We do have the possibility of rate cuts in 2024. This has investors optimistic. Volatility remains. 2023 was a volatile year, and going into 2024, we anticipate that to be the same. The possibility of a soft landing and not a deep recession seems likely by most economist standards. So let's stay the course, focus on long-term investing, make sure that your portfolio is well balanced, and be well prepared. Just want to thank you for tuning in today. This is our very first go at this. We hope to get better in the future.
Add that as well, just to thank you for your business. We appreciate you and look forward to continuing to work together in 2024. And if you know someone who you think would benefit from working with us, feel free to share this video with them. And if you think they would like to receive our mailings in the future as well, provide their contact information and we can add them to our list. Again, thank you for your trust in us. One of our primary goals is to keep clients informed, and we appreciate you watching this update. Feel free to call our office at 269-372-3229 if you have any questions. Thanks.